Hello everybody, welcome to the TraderMerlin Show. It is your Monday edition, an exciting one out there today. Thank you, Mr. Buffett, for creating some nice little waves to the south side when our futures markets rolled over on Sunday evening. I'm sure you futures traders out there saw that and were like, wow, some nice moves. Hello everybody. So you got a big group out here. Patrick Gayer, Mr. McMahon as well joining us. That's awesome. Jorge, Tomasinas, Stefan, Big Eb, hello to everybody. I didn't get to mention Pepper as well. Good to see you guys. I see I've got some concerns and questions regarding retirement accounts already. What I've been doing is trying to address as many listener questions as I can. Because I'm doing all these videos and running so many different social media sites, sometimes they get lost in the shuffle, but I'm doing my best to get them all. And I kind of gathered them together, and I thought, you know what, let's do something a little bit more retirement focused. It'll be higher level, but I think one of the big problems we have in America is most people just don't understand how the retirement account works or any of the other little gory details about retirement accounts. So why not take the opportunity? Because I think we're at a great time right now market-wise to make allocations or rebalance our portfolios should we want to for the long term. So that will be the topic of today. Of course, you guys can always, type your comments into the chat window. Of course, if you are new to the program, I would encourage you to click that subscribe button because I do these live shows every single day, and it's going to be very listener and viewer focused. So subscribe, spread the word, hit that like button if you like our content today. Let's start off with our market update just to get a feel for what happened out there today on a Monday morning. Obviously, Thursday and Friday, we had some fairly nice sell-offs in our equity markets. Did that continue today? Well, we started off that way. We started off with a fairly ugly start. Thank you, Mr. Buffett, for your press conference, talking about how he's unloaded all of his airline holdings. That was pretty brutal. Of course, you saw airlines down there pop to the south side and then now starting to move to the north side, moving actually nice upside intraday gains. Let's start with the Russell 2000, which was your worst performer out of the markets I'm going to cover today. It just recently, literally in the last 60 seconds since I started the show, moved into positive territory. You can see on the list over here, RTY futures up 0.01%. What's noteworthy really is just the shape of it. When we rolled over last night, there was a pretty nice gap down because of Buffett's comments and maybe just overall market momentum. But we rallied. We kind of recouped all those losses, ended in positive territory, which is pretty good for the Russell. The 10-year. Obviously, we talk about the 10-year. You guys know the relationship here. We're looking at the yields right now. This is the price of that 10-year futures contract. And as those yields drop, the price of that bond will be moving to the upside. And it's been really stuck here for a while. This is interesting. I should have brought this up when we had Corey Lane on the program on Tuesday, because you have this ascending triangle, this pressure building right around that 140 mark, just south of the 140 on this chart. And you can see it's been making higher lows, and highs staying right around the same. That's usually, I say usually, an indication that things may be moving to the north side. That once that pops through, you get a big spike. What's weird about that is if we do get a spike up on this product, that US 10-year Treasury note, that means the yields will be dropping further again. And right now, you're looking at the 10-year yield about 0.637. This spike that we had over here on March 9th, that brought us to a high price on this bond at 140.24. That was when our 10-year yield was at 0.5. So basically, if we see this thing spike to the upside, yields could fall very, very quickly, and that might bring us back down towards that zero mark. That said, that was your, I think, number 6 out there today. I'm going to go to the S&P 500, which also showed some resilience today. Got some lines on there for my chart of the week. Hopefully you guys enjoyed that chart of the week. I did one on the unemployment numbers, which I thought was very interesting when we look at the overall marketplace and landscape of our markets. We're only down 16% in the markets overall, yet we've got almost 20% of Americans in our workforce are now filing for initial unemployment claims. Riddle me this. If you have 20% of Americans now looking for work, wouldn't that just numerically translate into a 20% decline in the markets? And now we have still the ripple effect from all that. I think you're looking a lot more down, but that's just me. All right, so we're looking at the S&P 500. On the day, you were looking at a gain of 0.2%, finishing at 2827.5, which is where it's at right now. I actually just opened a short position on this, and I am going to start building a bigger short position with options. I did buy 10 puts for the 185 for September on the ES today. I think that we're actually going to have probably a little bit of a rally up here, which is fine with me. I'm okay to be underwater for a few weeks. But ultimately, I think by September, you'll see this thing considerably lower and possibly even test out those lows that we saw on March 23rd. That brings us to gold, which did very well today, up 0.58%. Still, from the perspective of the technical analysis side, it's not noteworthy, right? We're above that 1700 mark, 1710, which is great, but really there's nothing technically exciting here to speak of, so we will move on. All right, NASDAQ 100 showing some nice spikes to the upside. No bad comments from Elon Musk today. Of course, I think you had Warren Buffett pretty much do the same thing. Remember on Friday I was giving Elon Musk a hard time because he said, Tesla's share price is high in my opinion. Well, if you think about what Warren Buffett just did yesterday, he pretty much said, I think airline stock prices are high, in my opinion, and look what happened to them. Up. Still a ways to go. I do think you'll see it challenge that 9,000 mark there again. We did see last week the FANG stocks kind of bring this down with some ugly earnings on Thursday and Friday, but ugly forecasts Thursday and Friday. All right, number 2 brings us to Bitcoin. Bitcoin over the weekend had some really nice spikes. You can see here on the 30th, well, it goes back to Thursday, we broke above 9,500. Right now we are at 89.35. That on the day brings us up 1.92%, but that's not your leader. The leader again. Crude oil, a 7% pop to the upside. I'm so frustrated that I did not keep those UCO long ETF shares, but oh well, it did well on that one. But you're up 100% on oil. Let me repeat that. You're up 100% on oil in 5 days. Yeah, just want to put that in perspective. Not only that, but if you go back to the 21st of April right here, we hit a low of 650, and in 3 days, we ran up to a high of 1650. So you're up, almost 180% in 3 days, and now we're up over 100% in 5 days. So oil is the place to be from a volatility perspective, and goodness gracious, what some amazing moves they are for crude oil. And that is your number one performer out there. Hopefully some of that put some green into your pocket. Patrick says shout out to his mom. All right. Glad to have you. The last name is a little bit hard, Stefanik. So, Mrs. Stefanik, welcome to the show today. Hope you enjoy it. I'm glad your son brought you into the fold, into the fray. Let's see what I got. A really quick chat. You're in British Columbia too. I love BC. I actually was when I was younger. I went to the World Expo 1986 in Vancouver. And it's kind of funny. I don't know why I went on this tangent, but sometimes we just have to throw in stupid humor. I don't like geese. I know, random, right? Okay, there's your useless trivia for the day. But the reason is this. I was running through Stanley Park with my dad. We took his old 280Z up there, and we're going to the World Expo, which was very cool. If you ever have an opportunity, go to a World Expo, if they ever have them again. And we're going through Stanley Park, and I'm chasing geese around. I'm running all over the place trying to catch geese. And what was nuts is I didn't realize how much geese crap all over the place. And I got back to his car, and my dad's laughing at me, and I'm like, what? And he points down at my pants. And I was a little kid at this point. 86, that would have made me 13, 14 years old, somewhere there. And I looked down at my pants, and it's almost all the way to my knees covered in goose shit. And ever since then, I've been terrified of geese. Anyway. Why did I tell you that story? Because I can. All right, let's go to our topic du jour. The topic du jour is 401ks, IRAs, and retirement accounts kind of overall. And I'm going to keep it very light. I am not a CFP. I'm not a certified financial planner. I will be bringing on some CFPs in the future here just to give us maybe some better insight as to how those assets or instruments work. Not assets, but instrument groupings work. I do have some knowledge of them because I've been involved with them for quite some time. So I'm going to cover them at a high level and answer a few of the listener questions that have been coming in. And hopefully I will do my best to make some clear, educated comments for you guys. So here we go. Retirement accounts, do's and don'ts. All right. I'm going to start off with a listener question that came in, and that was from RENEE. Or RENEE. I'm not sure how I pronounce that, but hopefully it's RENEE or RENEE. Hi, Merlin. I'm 28 and have been working with my company for 2 years. They offer a 401k program, and I'm not sure if I should participate. What would you do? This one is so, well, I guess for me, it's extremely easy. First off, you have to ask yourself, why would you even want to participate in a retirement program anyway? And the reason that you should all be involved in an IRA or 401k or SEP or something that allows for, tax-deferred earnings growth or investment growth is this. Social Security is a scam. Social Security will not be there for many people. I doubt that I will see, in my lifetime, Social Security paying me out. I've got a few years to go, but I've done this. I have 100% removed Social Security from any financial planning that I am doing whatsoever. I'm pretending it never exists. And if it does exist when I get to retirement, great. So we all need to look at the mirror and say, okay, I'm no longer going to rely on my government, who I'm sure most of you are like me and go, I don't trust my government anyway. But most of us have to look in the mirror and say, I don't trust the government to take care of my retirement for me. I don't trust that money's going to be there. I've seen how bad they mishandle simple things as buying hammers. How the hell are they going to pay for my retirement with Social Security? That's got to be mismanaged. So pretend it doesn't even exist. Now that puts it back on us. And if you go back years, there was a thing called a defined benefits program. That's a pension where you put in money for a certain amount of time, and then when you stop putting money in or you retire, they say you will get this much for this period of time or for the rest of your life. It's defined benefits. You know what you're getting. In the 80s, it changed. Well, 70s and 80s, it really changed. Now we are in a defined contribution. And what happened was those defined benefit programs, those pensions, they couldn't get the rate of return that they'd promised you. So there's this financial obligation on pension plans to pay you X amount of dollars like they said, but they can't do it. So what do? They flipped it. Now they created a 401k program. A 401k is a defined contribution. You contribute money, but the hook is this. You have to decide how to manage that money. And no offense to anyone in the room or Americans or French or anybody around the world, but most people are ill-equipped to manage those investments. It's been a failed experiment. There's tons of research that shows that 401k plans, for the most part, are a failed experiment. We're not getting the rates of returns that people wanted. So if we take it one step further, now we say, okay, now I'm of the mindset that I have to be looking for an investment vehicle to grow my nest egg. So when I want to retire, I can. Now it begs the question of, do we go through IRA or 401k? And I'm going to just keep those two at very, very high levels. The first one is your 401k, which is what RENEE is asking about here. Now, RENEE, my personal feeling is this. If you take those two side by side and you say, I've got, my hands aren't even close to being level. There we go. Let's make them even. There we go. If you take the IRA and you take the 401k at face value and say they're both retirement vehicles, you have to look at what's going to give you the most bang for your buck. First question you should ask if you have a 401k is go to your HR department and say, do you match? If they match anything, then you should probably get yourself a 401k. Reason for this is it's a guaranteed free rate of return for 1 year. So let me take a step back here. If you look at what a 401k does, you can contribute up to $19,000 per year. If you're under 50, I believe if you're over 50, it's $25,000 a year. Your employer may match some of that. So let's say you put in $1,000 a month into your 401k through work. If they don't match, you're personally, in my opinion, better off not doing it. Why? Because 401k plans have a lot of fees. There's generally a fixed basket of mutual funds that are chosen for you, the investor. Now, a lot of those aren't the best performing funds. A lot of them are simply put in there because whoever is the fund family, let's call it Rothfeld Investments. Let's say I'm making that name up. Rothfeld Investments manages the 401k for your employer. So your employer comes to me and says, hey, we want to set up 401ks for our employees. I say, great. Here you go. Here's some guidebooks. Here's all the steps you guys have to do. And here are all the mutual funds that your clients, your employees can choose from. Of course, Rothfeld Investments is not going to pick what's best for you. I'm going to pick what's best for me. I'm self-interested. Now, I'm not going to rob you blindly, but I'm certainly going to go out and I'm going to put funds in there that might be 0.25% higher in fees. Why? Because I'm probably going to get a percentage of that, which means more revenue for me, the fund family. So at face value, if it's a 401k or an IRA and your 401k plan does not match, you should probably go with an IRA. That said, remember, with a 401k, you can contribute $19,000 a year. With an IRA, you're capped at $6,000. And you can also not make any contributions to an IRA if you are over $137,000 individual salary per year. Once you go above 137, you can't put any in. So if you're making more than that, go with the 401k. If you're making less than that, probably go with the IRA. If your employer is matching, you should go for it. You should do it. I have a friend right now. We were talking about this a couple months ago, and she's like, well, I just started. They have a 401k plan. And I said, well, do they match? She said, yes. I said, well, what do they match? She says, well, what do you mean? So she went and asked, and they matched 1 for 1, meaning every dollar that she puts in, they match $1. And I told her, I said, no offense, I mean this in a nice way, you're an idiot if you don't take advantage of that. Because that's a 100% rate of return. 100% rate of return. One of the best trading groups in the history of the financial markets, the history of the markets, earned 80% per year. 80%. And that puts them as the pinnacle of elite firms. They're called the Turtle Traders. You might have heard of the bet wager between Richard Dennis and Bill Eckhart. That was many, many moons ago, and we could talk more about that as you guys like. But they earn about 80% per year. Just by getting matching, you're making 100% rate of return. Now, you don't get it every year. That's only when you make that contribution. But still, it's free money, so take advantage of it. If they offer 25 cents on the dollar, you're getting a 25% rate of return for free just on making that deposit. Do it. So there you go, Renee. That was the first question there, was what should I be doing if they offer a 401k program? Right away, I would ask you to go talk to your HR department and see if they match your investments. If they do, maximize that. And there, let's see, can we weigh in? Oh, one sec, guys. I'm seeing all kinds of questions. I want to make sure I get to some of these. Big Ed, which one? Oh, you're talking about the Coinbase Pro. Let me repeat that question later on when I finish this, because I want to make sure I get to the IRA thing without kind of getting distracted. Yes, Tom Barr says, I don't plan on relying on Social Security, but it's a transfer tax, and they will be taxing young people, and they will pay something to us old people, Merlin. They will be. The question is population growth. So as we get our population start to get bigger and bigger and bigger, are there enough people coming into the system doing these jobs, which right now it's a gig economy, right? It's no longer, hey, I got out of college and I'm working 40-hour weeks or 50 or 60-hour weeks. I'm working 3 jobs to make 40 hours a week. That's going to put them in lower payroll. So there's going to be issues on the money coming into the funnel. And of course, we know the boomers is massive generation. Massive generational gap with regards to money coming in. So yes, they are taxing them, but will it be enough to cover everybody who's going in? Not sure. I don't believe it, so I'm just pretending it doesn't exist. Obviously, I'm hopeful it is, right? I think we're all hopeful it'll be there because it'd be nice to get that check. Mike says, Merlin, isn't the matching limited to 6%? I believe it's actually up to the employer, but yes, most that I've seen have been 6%, but again, I'm not a CPA, so I can't answer all that. Allison says, what if your employer doesn't offer 401k benefits? Great question. If they don't offer a 401k, then what you have to do is you have to take that initiative and go and set up your own IRA account. So it's an individual retirement account. And this is important because I think that kind of leads us to the next question here. But before I get into that, remember, depending on where you set up your account, where you set up your IRA, also determines what you have access to. So in most cases, if you open them up with a major, we'll just say retail player like a Merrill Lynch, you're going to be stuck with investments that they give you. Now, there are other places you can go. I mean, I'm not affiliated with any of these companies, guys, so don't take this as I'm being compensated or plugging them. But if you look at E-Trade or Ameritrade, you can open up an IRA account there, and as Big Eb says, self-directed. Self-directed means you can pick your investments, and depending on where you go, you could trade stocks, ETFs, mutual funds, bonds, options, futures, Forex, depends where you go. So the challenge here is, even with the 401k, where we had this small little basket of mutual funds to choose from, the average person is underperforming the markets. They're not achieving their financial goals. The challenge when we open up to self-directed is now you have access to almost everything. So if you don't know what you're doing, this is really dangerous, right? Very, very dangerous. Now, I'll come up with some suggestions here in just a second, but just understand, especially for someone like Allison, you definitely want, in your case, if your employer doesn't offer a 401k, then go look at an IRA, right? And here's where the challenge is. You have to now be proactive. You have to say, okay, every month I'll send in, $200 or $300 or whatever number is comfortable for you. Remember, you're capped out. I think you're capped out at $6,000 a year self-directed if you were under $137,000 per year. If you're over $137,000, you're kind of in trouble there. Yeah, we won't be able to make it into an IRA. Okay, so let me go to some listener questions here. There's 3 that kind of fall into the same big grouping here. This one was from Leonard on Facebook just a little while ago. So Leonard, welcome. Thanks for sending in those questions. If you look at the first one, it says, moving my 401k to cash, such as a money market fund during these crazy times, definitely feels like the best option. But what if my company doesn't offer a money market fund? What is the next best option? A bond or anything else? Okay. Second one says, can you explain why fund managers can't go directly to cash with people's 401ks or mutual funds, and the rule that states how banks and brokers must keep certain amounts of money invested in the market? That's from Bob. The third one is just pretty much the same thing, is from Robin, whose husband recently passed away. Sorry for your loss, Robin. They are saying that if I move his IRA to my IRA account, there are no cash options. Does this sound right to you? The answer is hell no, that doesn't sound right. It's not right. And I believe that there's some fiduciary obligation here. I believe it would be almost against the law. I think the SEC would absolutely have a rule against us. I'm not 100% sure, but I'm pretty sure that they have to have something that is lower risk. Now, for some reason, they've set this up where you can't go to cash in a 401k. This question with Robin is interesting, and that's why I emphasized at the very beginning. She says, I want to move his IRA to my IRA account, and there are no cash options. My suggestion to you, Robin, would be very simple. Move away from whoever is managing your IRA. Because if they are telling you, and this is a firm, that with an IRA you can't go to cash, I know I'm going to get some hate mail on this, they're assholes. There's no way they should be telling you you can't put your money into cash. That's the safe investment here. If you're uncertain of the market, go to cash. So whoever you have your 401k or your IRA with, if they're telling you that, I would politely say, I want to close my accounts. And I'm going to do so right now, and they shouldn't charge you any fees. If they do, I would tell them you're going to get some litigation going here because they are money hungry. In a 401k, in many cases, you can't go to cash. And I believe that's the way that 401ks are structured. They always want to have your money in something. So you can go to what's called a cash equivalent. Now, as a couple of the guys, I think Bob was asking, and Leonard, you could go to a money market fund, which is supposed to be $1 for $1, and when the dollar, it basically holds its value. But some might not offer that. So what you have to look for is what's called a stable fund, right? A stable fund is generally short-term treasuries, 3 to 6 months. So it's very short-term. It's not cash. It's not risk-free. It's just more stable than the other investments. And unfortunately, that's the way that 401k plans are set up. If you're in an IRA, then you can put it wherever you want, right? So I have, when I was making less money in my IRA accounts, I still have them, right? And once I went over a certain amount, the IRA account is still there and has funds in it. I move it to cash whenever I want. I just close out whatever positions and it sits there in cash. Yes, Mike says the old 12B1 game. That's the sales, administration, and marketing fees that they still charge you in mutual funds. It's a joke. It's an absolute joke. It's an old, antiquated system to make money for whoever's offering you those mutual funds. So for the last 3 questions there, it's actually rather simple. When I look at Robin's, if they don't offer a cash option or a cash equivalent, meaning, so instead of just going straight cash, they'll offer you either a money market or a treasury bond fund, meaning it's something that's very, 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 very stable. If they don't offer that, I personally would recommend, Robin, that you move it over to an E-Trade. I have an E-Trade. Actually, I had E-Trade, but they were screwing with me on some fees, so I moved to Ameritrade, and there we go. I keep it there. It's real simple. I can put it whatever I want. If I want to go to cash, I click the button, sell it, and I go to cash. And especially in these market times, we are in extremely bizarre, wild, volatile times. And it was probably in the best interest of those who are right near retirement or really relying on that capital for retirement to go to cash, to just ride out. If there is another major leg down, step aside and let it just fall, right? And go to cash. If it has another move up and you miss a little bit of that's fine, but we don't want to lose 50% of your retirement needs, retirement capital right as you need it. That's just a fool's errand. So make sure you sidestep that. I would move it, Robin, would be my recommendation. For the gentleman before that, which was Bob, I don't know about the rule that brokers have to keep a certain amount of money invested. I know that they want to keep it almost always invested because if it's invested, it's in something that they are getting a slice of the pie on. I mentioned years ago that I was working for a financial planning company, and every mutual fund that this company promoted to their clients, they were getting a kickback from the fund family. For example, the fund family was the Neuberger Berman mutual funds. And at the time, Neuberger Berman was charging load fees of 5%, meaning you had to pay 5% just to buy into this basket of stocks. Ridiculous. It was such a joke, and the firm that I was working for was getting paid some of that and also getting bonuses for promoting those mutual funds because they were highway robbery. It was horrible. Really, it's one of those things that just really pisses me off about the entire industry. I find it's criminal in my mind, but the SEC lets it happen. So, let's see. How many contracts do you trade per day in a real account? Do I trade a real account? Yes, of course I trade a real account. That's all I trade. You think I trade sim? Novella says, how many contracts do you trade per day? Doesn't really matter the day. It's just when I feel like it. And I'm trading everything. I'm trading equities. I'm trading stocks. I'm trading futures. I'm trading options. I'm trading Forex. So it's not like I'm stuck in one thing, so I can't give you that. But yes, all my trades are real. Let's see. What else? Can you contribute to non-deductible IRA? Yes. Okay, so there's a couple different things here going back to Renee's question about the IRAs. There's two things to consider. Obviously, you have your choice of going a traditional IRA or what's called a Roth. And you also have a traditional Roth 401k, but most employers just give you traditional because it's just they can't be bothered with it all. Disappointed with my shirt. It's custom tailored, Dave. Come on, what do you want from me? Here's why you want to make those two considerations. And this is probably good for Renee, who is 28 and starting out. If you're just starting out and you're not making a lot of money, you probably want to go the route of a Roth IRA, not a traditional. And here's the big difference. With a traditional IRA or a 401k, you don't pay taxes on that money that you contribute. So let's say we were using the example of Renee putting in, let's say, $1,000 a month. In a traditional 401k or IRA, that $1,000 a month would not be taxed. Not taxed. So now you can actually lower your tax bracket potentially, or move into a lower tax bracket potentially, but you're lowering your tax hit today. Problem is, let's say you build that up over 30, 40 years, you have $1 million sitting in your account when you retire, and you want to pull it all out at once. If you pull it all out at once, then you're going to be taxed at the highest tax bracket. You'll pay almost 50% in taxes on that. So your $1 million is really a lot less than that. I used Roth IRAs because my belief, my brain works a little bit simpler. When I see a number, I want that number. The way that the Roth works is you are paying taxes on it today. So that $1,000, you're still going to pay taxes on it. But I was making the assumption that I was in a low tax bracket anyway. So I'd rather pay low taxes on that $1,000 today. And then when I pull it out and it's still that same $1 million in that account, it's all tax free. So the question is, do you want to pay taxes now and get it all tax-free later, or get tax-free today and pay taxes later? That's up to you. My thought was, if my account's $1 million at the end, and I had my choice of being a traditional or a Roth IRA, and the traditional, I could potentially pay half of that in taxes if I want to pull it all out right now. I'm left at $500,000. That doesn't sound good to me. But if I'm in a Roth IRA, that $1 million is all mine. I can pull it all in one lump sum, no implications, done. I don't have any tax hits. To me, that's a little more appealing. Again, this is something that it gets kind of tricky. Depends on your current pay situation, how much you think you'll be receiving at retirement or earning at retirement. So you really need to talk to a CPA to get those numbers kind of more in sync there, so you don't get caught off guard with some sort of, I guess, non-beneficial hit to your accounts. All right, Thomasina, my mom is 81 and still trades. If she wants to transfer her stocks to me to manage, can she do that, or do I have to have a Series 65? No, you know what you could do? Technically, I believe if you want to manage it for her, you do have to have some licenses, but you could be a co-signer on the account. She could log in and let you, trade the account, and then you're fine as long as, you can co-sign with that account. Yes, Natalia, Mike will hopefully be on the program soon. I don't know why. Mike should be on more regularly, but he's afraid of me, I think. Indigo says, we still need to be prepared if they change the tax law and Roth accounts become taxable on gains. Yes. And unfortunately, this is just one of the dark sides of dealing with governments. And it's not just American government, guys. This is Canadian and French, German, whatever. It's all going to be the same around the world. They could at any moment pull that plug on it. I'm sure there'd be outrage with regards to them raising or taxing that or taxing it all or closing out that little loophole of Roth, but who knows? Right now, that's where mine is. I can't contribute because of my earnings, but when I did, I chose Roth because at the time I felt I wasn't making a lot of money. I'd rather pay taxes now, knowing that number in that account whatever it is when I pull it out, is all mine with no tax hits. Catwoman, thank you. TD Ameritrade has a form for trading family members and other accounts. I don't know about other brokers. Yeah, I'm not 100% sure. I think if it's family members, you're okay. I think if it's family members, you're okay to trade that, but there has to be, it's almost like a power of attorney type of document where you fill out this one, and it allows you to do that. But I know that every time I open an account, it says, do you want anybody else to have access and trade this account? If so, who are they? So that's what I would recommend. Sorry, Natalia. You know what? I have to Indigo, and I've seen that a question a few times here. What's the best if you make over 140? I'm not really sure. I don't know. I stopped worrying about that. Not unfortunately. I don't contribute. I contribute to a 401k through my former employer, but I'm not sure on what would be the best alternative. Let me research that one. I have a friend who's a financial advisor. I'll bring them on or ask them and maybe bring them on and see if there were special things. I know you could set up some programs, self-employed pension programs like an SEP, but you have to be self-employed. But there's got to be an answer to people making over 140, right? Okay, there was one other question I had here on the IRA piece, which I want to get to before we wrap her up. Well, it is this one. And this is a great question from Amit. Amit says, in today's session, can you talk on managing 401ks during these times of extreme volatility? Sure. This is obviously a situation that we are presently stuck in, is this time of real extreme volatility. I'm not worried about it whatsoever with regards to my long-term investments because I'm in cash, so I'm not worried that way anyway. But even if I was, I know I have the benefit of time on my side. The people that I'm really concerned for are those that, let's just say, are 55 to 60. You're in that age bracket where you're going to need that money in a few years. And if we have a prolonged downturn, some people are calling for a depression from all this. Who knows? That's all speculation. But if we do get a prolonged U-bottom and it takes a couple years to get out, all of a sudden your retirement accounts are way lower and you're going to start pulling money out when it's at the lows. When you don't want to be doing that. You want to be pulling money out when it's at its highs and buying more when it's at its lows. But unfortunately, time is a factor for everybody with regards to retirement accounts. So the question from Amit, which is how do we manage these in times of extreme volatility, I think it really depends on what your aptitude is and how well you have, I'll say, discipline and risk management under your belt. Now, I know that most of you that are watching this right now, with the exception of a few, are experienced traders. You probably come from Online Trading Academy. I know there's a lot of new people out there. If you are new, hit that subscribe button. That definitely helps me out. And the thumbs up button, by the way, if you like today's show. You have to think of a couple things, and I'll explain to you what I would be thinking in these times of volatile markets. Number one is if I have a long-term retirement account, and again, my account is in cash or cash equivalent. It's in a bond stability fund. It's in short-term treasuries because the 401k plan at work, that's all they offered, so that was it. So going to cash would be number one, and that's just the safest thing. You don't have to have the stress of being in these markets during these crazy times. The other side of this is this. If you have a longer-term approach to the market, you're a Warren Buffett type out there, the number one thing that I would be doing right now is I would be in my retirement accounts, which is in cash, I would be selling put options. I'd be selling put options on airlines. I'd be selling put options on banks. I'd be selling put options on the indexes themselves if need be. And I'd be doing it way lower. For example, let's bring up a chart here and I'll show you what I mean by selling put options. So let's say you didn't want to go into individual securities. You thought, I'm just going to buy this market and I feel comfortable buying this market. Well, I could go out there right now and let's just see, bring up an options chain here. And it's going to look weird because the market's closed, so the hours are a little bit off. Oliver, I'm not daring Mike. Mike knows he's always welcome on the show, and he will be on for sure. Where did it go? I got my option chain over here. I'm going to look up SPY. And let's say that you wanted to buy some SPY, and you want to do it monthly, right? And the only reason I'm saying to do it monthly is because you're going to use this to do a couple things. Number one is generate income for yourself. How do I generate income? How do I get paid on a monthly? Every month I want to have a check coming in. Boom, check. Give me a check. The second one is if the markets do crash down to a certain level, I'm happy to buy it at that level, right? So what do? Let's go to the monthly options here, and let's pick a number that you'd be comfortable buying the S&P, right? So I'll go out here and, you guys give me a number. You guys can see this chart here. Natalia says 220. Okay, let's do 220. I think 220 is right down here. So basically you're saying these prior lows. I'm happy to buy when it gets back down to that bottom. Okay, perfect. So we bring up our options chain, and I can't change the font on this, guys. I know it's so hard to see, but I'll go SPY. We're going to go up here and go to, you could do weekly or you could do monthly. But let's say we wanted to do the end of the month, which is only 10 days away. Really not that far. So let's go out the next month. And that's going to be, why are you not showing, there you go. The June options for it. So I'm looking at the June options, and here are the 220s right here. So basically you're looking at $1.48. So $1.48, if you sold one contract, only $148. If you sold 10, which is usually my block, I usually sell 10 at a time, basically you're looking at $1,400. You would be essentially doing this. You're saying, I am committing myself to buy if the SPY gets to 220, right? So if it drops all the way down there by June, I forgot the date on these ones already. June, I forgot the date. You're looking at about $1.50. $1.48 to $1.50, that's the spread. So I'm going to make it $1.50 for easy numbers. If I did 10 of these, that's $1,500. $1,500 to hold this for 45 days, and if it does not get to here, I keep that money. I'm not saying it's risk-free, right? There's certainly risk there. This market could definitely fall, but I don't know. I think that by June, we're probably not going to see those lows. I think it's actually going to happen after that. I think you're looking at July and August is when it really starts to drop. But, sell puts at 220, collect that $1.50 premium, and if you only want to do 100 shares, that's still, you'd have to have $23,000 worth of capital. Just to make that clear, you'd have to have $23,000 worth of capital, or $22,000. Why? Because you're selling one options contract, right? You're selling one put. And if it gets down to 220 or below, you could be exercised, meaning you have to buy 100 shares of a $220 stock, which would be $22,000. But remember, you've collected a $1.50 premium. So really, your buy-in price is not 220, it'd be 218.5. Not bad. And that's also so far out. So you could be doing that right now, selling options, selling every month. You could do them weekly if you wanted. How much could we get for a week? I shrunk it down here. How much can I get for a weekly option on this bad boy? Let me share it with you guys just so you can see. There are other people out there that like to sell them on Fridays because you get a free day of decay. But I'm going to go out here and go to next Friday, okay? May 13th. We got a week away, a little over a week away, almost 2 weeks away. I go out here to the 220s. You're not getting much. Oh, I'm sorry. Yeah, that's the 200s. You get a little bit more for 220. You're not getting much. You'd be getting 8 cents. That's really not much. But remember, there's no way it's going to... Do you think that by next Friday, this thing's going to drop all the way down there? No. Could we do something like this? And say, you know what? I'm thinking that by next Friday, maybe I look at the 270s. You guys okay with that? Does 270 seem like next week would be a little bit of a stretch to get down there? So how much could we get paid to buy, let's say, the 271s, right? Just below this low that we saw on the 21st of April. So I will bring up my options chain. I'll look at the 271s, if I even have 271s, and I'd be getting $2. So again, if you sold 10 contracts, you'd be collecting $2,107 for those options. And if it doesn't get down to 271, which is 12 points away from this point right now, that's a pretty good drop. That's 6% down. You get to keep that $2,000. And in a retirement account, you could do this every week. You could be doing it every week, selling those puts, and hopefully for you, it doesn't execute you. But if it does, you're buying at a price that's much lower. You've already collected premium. You're buying at a discount. You can always sell those out. To me, that's how I'd be trading these extreme times. I'd be looking to be selling puts out there. Everybody, sorry, I'm reading through the comments out there. So that's one way I would be doing it, Amit, as far as handling these extreme volatile times. The other thing I'd be doing is I would be looking, if I was a long-term investor with regards to retirement, is I'd be looking at buy points way, way lower. Does the 220 on the SPY look like an attractive buy point? Sure. You guys remember, I'm actually buying puts at 185 right now. I think we're actually going to break those lows at some point and move further to the south side. So to me, the strategy needs to be tailored to you individually and what you plan on doing. Best thing to do if you're afraid of volatility and risk, go to cash. Just get out, sidestep it. Don't even have a worry about watching CNBC when these markets go crazy every day. Just it's not going to bother you. But there needs to be a point where you're comfortable buying back in. Find out what that is. Maybe use options as a strategy there. That's how I would be doing it. I am a big bear. Yep. Especially when I'm looking at just the economic data. There's no way you can tell me 20% of people are just filing for unemployment, and that's on top of all the other people, and we're only down 16% of the markets. Actually, probably down 15% now. It's crazy. It would be a meltdown, but remember, life will not be the same as when we went into this. Right? We had these huge protests in Huntington Beach over the weekend, which is like Darwinism at its finest, because here we are trying to flatten the curve, and you get tens of thousands of people all going into one condensed area. So what you'll probably have here in Southern California is what? You'll probably have an outbreak again in another couple of weeks, which means they'll slap on more quarantine, and all of a sudden it's one of those things where it's going to be very difficult to get back to normal. And my argument was, I had a Giants jersey on when I did the week ahead, the chart of the week, which you can see on the YouTube channel. I'm probably not going to go to a sporting event game. I'm probably not going to go to a sporting match anytime soon. And if you do go, are they going to remove 5 out of every 6 seats now we're spaced apart? Right? What happens to all the lack of vending, all the beers, all the hot dogs, all the parking, everybody who's working there? I mean, all of a sudden, all those jobs disappeared. So you're going to have shortage of, Hebrew national francs. You're going to have shortages of, you got beer manufacturers and start laying people off because they're just not selling as much. So I know, I just see it's going to be drawn out. We will recover, don't get me wrong, guys. I'm not the purveyor of doom and gloom and this is the end of the world. It's just a different paradigm for where we are right now, and things will be different. We are resilient. We will absolutely get back. But it's not going to be, we're going to get back like this. We've been due a big market correction. Matter of fact, we've been due a market crash for a few years now. This was just the catalyst for it. I think it'll wash everything out, and in a couple of years, we'll be back on track. But it's not going to be this, hey, everything's great. Let's go back. We're all normal. Everything's fantastic. Not going to happen, I don't think. Okay. If you do get assigned the stock, can you immediately sell it? Yes. Yes, you can. Or can you buy it at close? Yes. Here's the only challenge I have with this. So let's say we were looking at we're doing the month. We did one, it was a month and a half, so like 45 days out, and that was at the 220s, right? So it's a great question, Tom. Let's say you sold the 220 puts, and basically you've told the market, I am willing to buy it if we get to 220. So let's say, I'm making it up, you've got a 45-day option, and in the first 5 days, it just goes straight down, and now it's below 220. It's at 210, 200. 195. And you're thinking, I just want to sell my shares, but they haven't executed it yet. You have to wait for them to exercise that option. That's the only thing I hate about selling options is that person can exercise right away as soon as it hits 220 or just sit there and wait. And I'll give you a good example. Let me show you what happened to United Airlines. Okay, here's United Airlines. When we fell to here, I'll put a horizontal line where I sold the options, and it was somewhere, I think it was somewhere it was $35. So it was right around here where you see that horizontal line. I sold the $25 put options on United Airlines. I said, there's no way this thing's gonna get down here, right? It's just not gonna happen. It's already down so much, and if it does get down to $25, I'm a happy buyer. Well, notice what happened. There was a couple days here where it ripped down below. It went all the way down to, what was that low? 1780. Remember, I committed to buy at 25. So if it got below 25, I wanted to sell that thing, at least if it fell that far. Now it's at 1780. I'm almost $8 underwater. I was going, oh, shit. Oh, man, this is not good. It's going to go to 10, going to go to 5, and they're going to give it to me at $5, and I'm screwed. But whoever had that option contract did not exercise it because it bounced back up. And when I finally got out, I don't know, was it like $30? So if he didn't exercise it and it's now above 25, he can't exercise it. Does that make sense? It's not like he can look back in time and say, well, a week ago it was down below 25, so I'm going to exercise it now that it's at 30. It doesn't work that way. He had to do it at that moment in time. So I was lucky. Well, was I really lucky? Because if I got executed at 17, it shot up to 40. I would have made a lot more on the execution side of it. But you see the problem there, Tom, is they have the ability to hold that execution, and they may not execute it. It all depends. If the call went against me, I could buy to close, or I could, yes, you could buy to close that option, but you'd obviously take a loss on it, right? Yep, you'd take that loss. All right, Natalia said, I sold SPY 230 puts when it dipped to 218. Did not exercise even though expiration was 2 days away. I sold SPY 230 puts. Oh yeah, but it popped back up, right? It popped back above 230. Yeah, same thing. All right, cool. Well, those were your 401k pieces, and I know it wasn't like a clear, concise explanation of what a 401k is or anything like that, but it's just an investment vehicle. It's one of the things we should be taking advantage of. I know some of you probably have 401ks at work, and you may not be involved with those. If they're matching, guys, do whatever you can to go in there and maximize that out. Max out what it is if they're matching. The other part here is when you look at what's happening right now, obviously a lot of you might be facing financial hardships and be looking at tapping into that 401k. They're making a lot of, we'll just say, changes to the rules. It used to be you had to pay a 10% fee if you were going to pull out anything before 59.5. And now they're waiving that. You can pull money out. You can do it as a loan, you can do it as a payment, but I would encourage you to not do that. Unless you're running like credit card debt at 25% or something like that, yeah, take it out and pay off that debt. But also, if you have that much on credit card debt, you have to understand that you probably have bad spending habits, and you need to watch your spending there. I do something every month. There's an app, it's called Expense. There's a bunch of different ones out there. I know some use, was it Nest, or no, that Nest is the phone one, Acorn or something like that. I use one called, I'll even show you the icon. It's called Pocket Expense. Oh, it disappeared. It's called Pocket Expense. I would encourage you guys to use that one. I basically, I'll do it every couple of months. I do from the beginning of the month to the very end of the month, every single thing I buy. Every dollar I tip, everything that I do, I put in there. And it's just a good understanding of where are my expenses, what am I spending the most on, and what can I maybe fix. Because if you have credit card balances right now, if you're in debt, other than your home mortgage, you really just got to start thinking about what you can do to reduce that as much as possible. You know, that $1,200 check many of you just got should go right to your credit card debt, whichever one has the highest balance on it. Every dollar is also going to cool. Yeah, there's a bunch of great free stuff out there. A lot of great free stuff. Okay, Merlin, besides it being a different asset class, is selling options the same in the futures market as you just described on the SPY? No, yes and no. I mean, you're basically coming up with the opinion of, if I look at futures, I have two choices, correct? I think it's going to go up, or I think it's going to go down, meaning I can go long or I can go short. With options, it goes into a whole nother dimension. You can still make those same basic assessments. So if we look at any price chart and said, hey, I think it's going up in value, I can buy a call or I could sell a put. So now I have two ways to capitalize on every direction. So if I think that this market's going to continue to drop to the south side, I could buy a put, which means I think it's going down, or I could sell a call, which means I also believe it's going down. So it's the same mechanically, you're just adding different dimensions, and the way that the instruments work are slightly different because of all the strike prices and all the Greeks and all the different pieces. So it's a little more confusing, a little more complicated to understand. I am certainly not an expert in them. I know what I need to know to make the trades that I want to make. So that's why I try to bring these guys on the program as much as possible to share their viewpoints on different instruments. Angel says, do you use supply and demand when you trade or invest in bitcoins or cryptocurrencies? Yeah, but it's not the same strength. See, the reason that supply and demand works is twofold. First and foremost, and now you guys can make me do an hour show, aren't you? Oh boy, I tell you. It's supposed to be 30 minutes when I start off this thing. When you look at supply and demand, it works because it's what everybody's doing. And the biggest pieces out there for supply and demand are institutions. You know, no offense, but, I'm looking at Dave and Patrick and Thomasina and Kevin and Oliver and Sam. I'm not really concerned with where you guys are buying because you're not buying 50,000 shares at a time. You're not buying $10 million worth of a stock. So I need to find the guys who are doing that, the institutions. Now, the institutions, as we know, for the most part have been bad-mouthing the crypto space. They have been slowly getting into it, but I don't think that you see as heavy footprints from the institutions as you do in the equity markets. Let me rephrase that. I don't think you see as heavy footprints from the institutions in the cryptocurrency space as you do in some of the other more established trading markets, like futures, like options, like Forex. So there you go. Did I do we need more time? Yeah. My Merlin's 30 is a 60. You guys are fun. You know I do like this stuff, so all right, let me wrap up today's show, as I can't believe I'm going this long. Yeah. Well, I'm glad you guys think every minute has value. I'm glad you think that, and I do my best to give you as much content as I can. We had really all the exciting stuff happen last week, all the popcorn trades of the day, all the major stuff happened last week. So there isn't a huge amount that we're going to be seeing tomorrow, but I'll start you off with this list. Here's your earnings announcements for the 5th, so it'll be Cinco de Mayo. Of course, today was May the 4th, so to all my Star Wars friends out there, love it. I'm actually, as you guys know from my Facebook post, I am rewatching them all tonight. I will be back to Rogue One, so I'm working my way back through the series in order, and I'm definitely a big Star Wars fan, so love it all. Anyway, happy May 4th to you. May the 4th be with you. This is what's happening tomorrow. You've got Walt Disney, Dominion Energy, Allergan, Regeneron Pharmaceuticals, Activision, which has been a real high flyer. That thing's been just crazy lately. You've got Newmont. You have... I love it. This is my favorite ticker symbol. Well, one of my favorites. BAMF. You guys remember watching Pulp Fiction? And the guy's like, let me see your wallet. And he goes, get my wallet out of the bag. He's like, what's your wallet say? It says, I'm not going to say it on the show. Even though I can swear, I'm not going to go into what BAMF stands for. But the ticker symbol for BMW, Bavarian Motor Works, like, it's BAMXF. So extreme effort is what it is. Love it. Anyway, and you have Thomson Reuters reporting earnings tomorrow. Those are the big names. There still are a lot more than that, but that's the big dogs reporting earnings tomorrow. With regards to economic announcements, guys, you do have a bunch of manufacturing numbers coming out tomorrow. Now, the main stuff will be happening pre-market. However, the ISM, non-manufacturing PMI, TIP IBD, economic optimism, those come out 30 minutes into the market, which is normally a reversal point anyway. There's a 30 minutes in is kind of this little reversal number that happens regularly. So keep an eye at 30 minutes in the market. You really have two important pieces of manufacturing data and TIP IBD, economic optimism, which isn't the best, but the ISM numbers I think are going to be pretty interesting. Other than that, you have trade balance for Canada, unemployment rate for New Zealand, but and if you trade the New Zealand dollar, that's going to have an impact. If not, it won't impact you too much. All right, any last minute questions here? Let me check over the screen. I'm going into the long-term time frame. Yes, BAMF was the tickle. Great. Awesome, guys. Well, thank you so much for joining me today. Hopefully, you guys enjoyed it. If you do, give me a thumbs up out there. Share that link. If you have friends that you think might be on the fence with regards to their retirement accounts, not know what to do, point them towards this show. I'm more than happy to do an even more focused, in-depth one. If it gets to stuff that's so in-depth that I can't answer it, I'll bring on a financial advisor, a financial planner, friend of mine, and we'll talk about these markets more in depth. But I'm trying to bring on more diversified topics. I'll let you know what's happening this week. Tomorrow is going to be a great show. Larry Jacobson is going to be on the program, and we're going to be talking about Warren Buffett. Now, Larry and I have both been pretty bearish on these markets. Yes, it's been a nice bull market rally, but that's what happens when you have extreme fear out there. Warren Buffett, I think, just stoked the flames over on the markets on the weekend because he basically said he unloaded all of his airlines. I'm telling you, Warren Buffett doesn't sell stuff. He holds for life. It's his mantra. So we're going to talk about that with Larry Jacobson tomorrow. I believe Thursday we're going to have my friend Zach Hopkins on the program, and we're going to be talking about weed. He is really into the cannabis industry, been involved with it for many, many years, works for some of the cannabis companies, and I wanted to just do a show just on maybe diving a little bit deeper into what areas of the markets might present opportunities for you. I know there's a lot of stuff, and it's some people don't want to invest in that market industry just because it's cannabis. I get that. But I think we look at it from an investment opportunity. A lot of them have been very, very beaten down, and I think there's some tremendous opportunities out there in the cannabis space. And then on Friday, oh, man, I am very, very excited for Friday's show. We are going to have, I will say, an oil guru. Yes, an oil guru. It's not too often I get to say an oil guru. He's one of the top guys out there. When we were talking about him a few weeks ago, and he'd been making calls that he thought oil would be going down to $10 and explaining exactly why it wasn't happening, and lo and behold, it went all the way down there. So we will be talking more and more. What is going on? I'm trying to pull up my calendar right here real quick, but unfortunately that doesn't want to work. Yes, John Rowland, JR, the man, the myth, the legend, JR, will be the guest on Friday's show. So pretty excited about that. So we've got a full slate of guests this week. Tomorrow will be Larry Jacobson, Zach Hopkins, and then we'll have John Rowland on the program. That's our Friday. All right. Thank you guys so much for joining us again. Click that like button. Share it. Yes, Siraj, I will try to get Don Dawson. That's a tough one. Yes, Whiskey Friday with John Rowland. That should be a good one. Anyway, that will do it for today's show, everybody. If you got comments, put them down below. The video is out there, or you can go to TraderMerlin.com. You can send me any comments, questions, or anything you want to discuss. Maybe you don't want in a public forum. So feel free to do that there. Until then, happy trading, everybody. I will see you on tomorrow's show. Have a fantastic remainder of your day. I'm going for a hike with my dog. I'll see you tomorrow.